Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live trading, our weekly strategy roundtable discussion where we talk about current market conditions. We had interest rates decision in Europe, in the United States. So what to expect in the next year, as we are kind of heading into the new interest rate environment regime, and answer any questions you might have about your subscription. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Everyone else, all the returning subscribers, welcome back. Really appreciate your time. My brief bio was, my background is technology. I've been CTO of several publicly traded companies. I have a master's degree in computer science, specialized in statistics, artificial intelligence. Started a company over 10 years ago. Very proud of this experience. Again, I really appreciate your time, that you guys are here. We have a team of financial engineers that constantly building new models and using advances in AI, especially as it accelerates this year. The disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm going to go through specific trades, real-time trades, the positions that I have right now. So it's very important to understand the risk associated with trading stock or options. I encourage you to visit this link, optionscreening.com, so you understand the risk associated with trading stock or options. All right. Before we jump into a trading plan, let's talk about current market conditions and see if anything has changed. Looking at the spiders. Let's look at spiders. So we did break, so market broke through. Let's look at the weekly chart since we're talking about next year. Market decisively broke through the July highs and basically retesting all-time highs around 480. We were as high as 473 yesterday. So so there are 2 weeks left. I assume. I mean, there might be a volatile. December might be volatile, but we'll probably close somewhere between 480 and 460. So I'm not gonna talk about the next 2 weeks. But the question is, will the market be able to break through the overhead resistance, right, in the next going into June, right, for the next 6 months, right? Either Q1 or Q2, doesn't really matter. Is the next move up to, let's say, people project 10% gain, so let's call it 520. Let's use 520, right? So if we forward the clock, right, we're getting closer to 520 in the next 6 months and trading somewhere between 480 and 420, right? That's one scenario. So, and that requires a few things. One is, for interest rates to continue going lower. That seems to be the consensus. Dollar continue to be weak. That seems to be the consensus. No recession in the United States, no recession in Europe, and employment stays low. So employment stays high, unemployment stays low. Everybody has jobs, people spending money, and the earnings, S&P 500 earnings reaccelerate. Right, they have been decelerating. Now the idea that they will reaccelerate, especially with a low interest rate environment, right? The lower the interest, it should positively impact the revenue growth of the companies. That's scenario number one. Scenario number two, PMI from Europe came in weaker than expected. In the United States came in line. In Europe came in weaker than expected, and ECB was a little bit more hawkish. So maybe Europe will or will not enter to the mild recession, and if they do, they potentially can pull United States into mild revenue, mild recession, and we're trading somewhere between 480 and October lows, right? 480 and October lows. So this is up 10%, right? So plus 10% from here. This is down somewhere between 10 to 15%, 480 to 410, 70 points. Yeah, 10 to 15% down. right? And if United States enters recession, right? If we do have recession, uptick in unemployment, PMI decelerate, services, manufacturing, ISM heading lower, leading indicators heading lower, employment ticks up beyond 4.1% that Fed projects, right? 4.5, 5%. Then 2, right? And if it's potentially deeper recession, then we break through October lows, and average recession somewhere between 20 to 25%. 20 to 25%. Scenario number 3, right? So those are the 3 scenarios that are possible, right? One is no landing or soft landing, and everybody is happy, no recession. 10 to 15%, maybe Europe is in recession, but the United States is not, right? But still deceleration of the earnings, and we have an election year, so pretty volatile, and we just stay in this range. And then if we do have signs of recession, if there's more defaults in some of the regional banks, or consumers start spending less, defaults start climbing, reaching critical level, then 20 to 25% pullback. So those are 3 scenarios that you need to consider. I'll be ready for. So let's go through this exercise. Right? We talked about pros and cons for each of the scenarios. They're all plausible, right? I wouldn't be able to say, okay, 3 is off the table, or 1 is off the table, or 2 is off the table. Right? This exercise is much harder, but any long-term trader or medium-term trader need to have an opinion. Need to have an opinion and try to trade around these breakout levels or support levels. All right. So Martin, hello. Okay, we have more people. So how many of you say 1? How many of you say 2? How many of you say 3? Don, BJ, Martin, Patrick, Robert, Michael, Steve, Mark, Federer, Wolford, Y, 1. All right. So we have a few 1s. Anybody 2? Anybody 3? No sound. Can you guys hear me? I assume you can hear me. So please try to log in. Please. Oh, sorry. Use wire. Please use physical wire. Again. Oh, it does say cannot hear. Oh, you can hear. So okay. So yeah, most people can hear. Don cannot. So all right, BJ 1. All right. So most of you said 1. Most of you said 1. I'm gonna go with unpopular opinion 2. Right, 2. I think we're either gonna have mild recession, or we will have volatility in the market. Where right now there's and we've seen the reaction today, right? Fed comes out, one of the speakers, Williams, I think, came out and said, listen, it's too early to talk about March interest rate hikes. And market pulled back, it recovered. Most of the, people kind of ignore it because of the very bullish bias from seasonality, right? We talked about seasonality, that usually December there is a pullback within, maybe technology stocks had some pullback, right? So we did have pullback in technology, and then the last 2 weeks usually bullish, right? So so that's remains bullish, but January, February usually could be volatile, right? Especially during elections year, and especially if the interest rates, if there's indication that interest rates will not drop, Fed will not drop interest rates in March, or if they do, it's because the economy is decelerating, not because there's disinflation. So still a lot of uncertainty. For that reason, I think market is extremely overbought, and probably will reverse after first couple of weeks of January. So next 4 weeks, I think it's going to trade in a range and positive bias, right? Higher highs, higher lows, and then towards the end of January or end of February, the pullback will start. So that's my opinion, right? I kind of said the same thing last year. I mean, it kind of worked. I mean, it actually did work. You know, we did have a rally last year. Yeah, January started strong, right? January, all the way to the end of January. Then we had a strong pullback in February, right? 10% pullback, not a big deal. I mean, 420 to 430, right? So I think similar thing is going to happen this year again. We did have a rebound. I was in May. I said that you know, we're not going to break through the 430 level, and you know, sell in May and go away. So up until May, I was pretty accurate, or April. But then I did not anticipate this move to the upside. And again, that was generative AI, right? So assuming there is no new generative AI thrust to the upside, you know, this move is probably coming close to an end, right? So I would be a buyer into pullbacks for at least next couple of weeks, right? And then start thinking about hedging in the next few weeks or so. All right, so most important is 10-year yield, right? 10-year yield is important. It continues to drop precipitously, right? A lot of people are concerned about that, right? That could be one of the arguments, right? Bulls see it as positive, right? The disinflation. Bears sees this as also support for the bond market anticipates recession, right? Fed, you know, projected 3 interest rate cuts next year, but the move in interest rates already factors in, you know, 5 or 6 interest rate cuts. Right, so there is, you know, the interest rates are a little bit ahead of itself. So if there is a bounce in interest rates to, let's say, 4.3 or even 4.5, that would be at least cause the short-term volatility in the market, similar to dollar. All right, dollar kind of precipitously dropped, right? This A consolidation, B. You know, if it does bounce back, that would be bearish for the market. So I would look at the currency and the dollar. I think that will potentially can move the market. What else? Gold, right? Gold is sitting at all-time high, right? That's another argument for bears, right? Why does, you know, if the economy is accelerating and we're in the bull market and we're going to avoid the recession, usually people buy, you know, you sell gold, you buy technology, you buy cyclical names, but you know, gold continues to also accelerate to the upside, right? So that does argue that potentially we could have, you know, pullback in the market. And same thing with yen, right? Dollar yen pair, yen FXY or yen pair. Yen continues to get stronger, right? Continues to get stronger. Usually, again, that could be the sign that people look for safe haven and they are hedging. Not people, this is large institutions. As most retail investors don't trade yen, but large institutions do, right? And they're the one who drive the market. And yen has precipitously sold off in the past, you know, 3-4 years. So I would watch yen as well. Probably add FXY. Any questions? Another theme for next year, TLT. Everybody was wrong about TLT in 2023. I said the same thing in December. This will be the year of bonds because either recession or inflation will drop, but it didn't happen, right? You know, we actually, when in December, okay, we're even, right? But I thought there will be a huge rally, right? A lot of people thought this would be the year of bonds, but Fed finally pivot, right? They did pivot. They're projecting interest rate cuts. So I think we're just kind of whatever I thought is going to happen last year in December, I was incorrect. But this year looks like we have more evidence, right? Whether it's a recession or whether it's disinflation, right? Treasury should continue going higher. You can see TLT, how many weeks? 1, 2, 3, 4, 5, 6, 7 weeks in a row on a very large volume, continues to go higher. So I think this will be the year of bonds. Last year, most people were incorrect because inflation came back and Fed raised interest rates and held it longer, higher for longer, longer than market participants predicted, right? Everybody predicted that Fed will cut interest rates this year, but they didn't, right? They didn't. So that's why this didn't work out. But this year, Fed higher for longer, they changed that rhetoric. So in theory, LQD, TLT will continue to go higher. And in my 401k, that's where majority of my money, actually, at least half of my money are in the bond market. And that's one of the biggest calls for next year, right? Bonds, gold, yen, yeah. All right. What else is interesting? Small caps, right? I would watch the small caps. They're sitting in a very important junction, right? They're retesting. You have to go back to basically January of 22, right? So yeah, small caps, right? That was one of the strongest bear argument, that the rally is confined to Magnificent Seven or stocks that have very large balance sheet and they can withstand recession. But everything else, 90% of other stocks or 80% of other stocks are in trouble. Now these 80% of the stocks rally and they basically recovered all of the losses for the past 2 years. Dow Jones is actually at all-time high. So it will be a head scratcher. We have a decisive move higher, in January and February, and we're at 210, 215 level, then bears will capitulate. Bears will capitulate. Whether we will or will not have recession, I'm watching this level because I'm being bearish, but I don't have any bullish position. I don't have any bearish positions. Right? It's one of those bears that has all the bullish position. Why? Because I'm watching this level. If we do the opposite, right? If we drop below 190, I think this rally is coming to an end. But if we jump above 200, which we might, because we still have 4 weeks, you will see bears, slowly start capitulating, just like they did in, June, July, when we approached 200 level. So that's something to keep in mind. Model predicted for today on our main model 470, 480, right? I think that's a pretty good prediction. I think for the next 2 weeks, we're going to probably stay somewhere between 470 and 480. I mean, can you jump to 490? Can you have like exaggerated reaction to some of the macroeconomic data? Sure. Model doesn't see a lot of momentum below 470. I also agree. So that's short-term prediction for the model. I agree. 6 months prediction, model is actually turning neutral, right? For the past 6 months, model was extremely bullish on long-term prediction. Now it turned neutral. Why? Because we did have a bigger than expected sell-off in October and September, right? And model basically says this uptrend has been broken. The bullish uptrend has been broken, right? And don't anticipate a lot of momentum, at least as of right now, above 485 level, right? So model doesn't see 500 or 520 level, right? It doesn't see it. So we have to have some kind of a positive catalyst, some kind of new information that will push the market higher. It could be Q4 earnings, much better than expected, right? Earnings going to start in the next couple of weeks, right? Well, in the next 4 weeks. So in 4 weeks, earnings will start, and if Q4 is better than expected, if GDP is better than expected, that could push the market higher. But assuming things the way they are right now, the path of least resistance is to revisit 423 level or even 416. And I agree with the model, right? That's another reason why I'm actually right now put down 2. And basically, that's what my model says. Model is pretty good. The only way it's, makes incorrect predictions, not that they're incorrect. There's new data, right? Model has input, right? Everybody talks about generative AI as good as the data you train it on, right? So if there is new data comes in that's different, well, the model has to adjust. But if there is no new data and things the way they are, and there are no generative AI, kind of like we had in June, right? Then, the path of least resistance is not to take too much risk. So the model basically encourages you 480, 486. Maybe you don't wanna take too much risk, right? And you wanna start unloading some of your positions. So I agree with the model. So let's talk forecast toolbox for 6 months, 1 day short-term prediction. This is what I use on daily basis. Right, so I encourage you to use that. I kind of briefly showed seasonality, right? Like silver. The reason why I'm bullish on silver, because model also been very accurate, right? Usually you don't want to make decision purely on seasonality. A lot of people do that. I think it's a mistake. But seasonality was spot on, right? That there is a big drop in usually starting middle of November. So you do have a drop, and then you do have a rally towards the end of December, and usually it gets carried into January, February, March, right? So I anticipate, and other reasons, right? I looked at the dollar, right? I look at the currency that also pushes precious metals, fear of potential recession. So seasonality is important. Maybe not on individual stocks, but on ETFs or commodities or themes, it is important. So that's another tool that we have. Active trader. So usually I talk about TradeSpoon subscription, how we help, because they're divided into different categories, right? Most of our subscribers fall into 2 categories. They're either traders that have trading plan, they've been executing trading plan, they believe in their process, and they just need ideas, right? They need tools to get from point A to point B. From being successful to being more successful, they need tools, but they already have the plan. They have the strategy, and they trust their strategy, and they've been executing it for quite some time. So for those traders, we have stock forecast toolbox, we have active trader, weekly trader, monthly trader, right? Like active trader is, for this today was Nucor, Target, and FDX, right? So how do I traded them? I wanted to prepare for today's meeting. So in the live trading room, what I usually do, I wait for 15 minutes, right? And then I would put on, 8:47, I put an FTX trade, right? I put it to 80, I closed it at 281.2, right? It's trading at 282.49. So 1%. At this point, it's up 1%. I captured a little bit less than 0.5%, right? So that's my strategy for short-term trades, right? 0.5% to 1%, right? Using active trader model, right? A lot of people would say, Vlad, FDX suggested price 272, 279. It never entered that price, right? It kind of gapped up. Let's look at FTX. Oh, it did gap down. So, okay, so this time it actually model was spot on, right? It suggested 279, right? If you don't see a lot of push to the downside, then 279 is your entrance. If you see market drop to, pre-market futures are down, right? Pre-market futures are down, then 270. So 279.46 was kind of suggested price, so it actually was accurate. Let's say it gapped up, it never reached 279, right? Then people start asking questions, or even some of my friends using this model. My friend, is he here? Igor? He's not. Okay, then I can pick on him. And he's basically said, well, I don't have time to trade in the morning. I do it in lunchtime at 12 o'clock, right? Or he goes in and he says, how about the signal? There was a Google signal on December 8th, right? Is this, or Apple, is this signal still valid, right? So, and he's a smart guy, and he's been trading for a long time. So if you ask these questions, right? If you ask questions whether the signal was still relevant, or if it didn't reach the target, what should I do? That means you don't really have a solid trading plan, right? You don't really trust the process, and you're just kind of trying to, whatever the model says, you're doing it to point, right? And you have to understand models are tools. They don't know what yesterday ECB decision was, and what is the PMI data in the morning. So if you're asking these questions and you think some model can predict either to the penny the entry point, right? The models is the models. It's a forecast what will happen. Sometimes these forecasts, it's like weather forecast. Sometimes it's spot on. Sometimes it's completely different, right? Winds start blowing, the pressure start changing. Model has to adjust, right? So you need to have a pilot. So if you're asking these questions, I encourage you to join me in Elite Circle. In Elite Circle, you ask these questions and I can answer you. I personally trade the first 15 minutes. I think during lunchtime, I don't trade. Some people only trade during lunch because they found certain patterns during lunch that they like. So there is no wrong or right, but you have to have a process and you have to trust this process. So I encourage you to join me in Elite Circle because you either can ask me these questions live in morning bell or closing bell, or you can watch the recording. Let's say you have a full-time job and you can only trade from whatever 12 to 1, fine. But then at least you can watch the recordings, so you can see how I trade, and you can repeat the same process, right? And then all your questions are answered. And you can enter, in SMS alerts, you can enter your phone, and I will answer, all of your questions. Right, and you can see sometimes I trade stocks, right? Bank of America, I closed, AT&T, I'm still in a trade. Silver, so combination of stock and options, right? I did the option trades this week. So you have an example of both, right? Stock or options, right? I'm bullish, I was, pretty bullish on Russell 2000. So all these questions I can answer. So that's what I would propose, right? Start with Elite Circle. I mean, if you have trust the process, you just want to know when I trade, then it's also Elite Circle because you can enter the phone, you can get a text message, and then you can watch the recordings. Maybe my process a little bit different from yours. Maybe you want to borrow from mine. Maybe you want to suggest to me how to change my process. All great and wonderful, right? But you do have a process that you trust. If you don't have a process, I encourage you, please, please, please watch the recordings, watch the event. If you're under impression that you don't have to invest into education and you can just get a phone and just enter these trades, it doesn't work, right? Trading is just like any other education. You have to learn, right? You can't bypass the learning process, right? Some people think they can bypass the learning process. You can bypass the learning process for a week, for a month, for a quarter, but eventually it will catch up to you, right? Eventually it will catch up to you. So Elite Circle, we have Shadow Trader where you can just follow my trades. We have Premium Portfolio where you can only see option trades. You have Robo Investor where you can only see stock trades, but at least you have these portfolios, my portfolios that you can watch real time, right? If you have your own process, you look at my process and you say, Vlad, I mean, whatever you're doing doesn't make any sense to me. This is not what I do. I respect that. Then we have these tools, right? Stock Forecast Toolbox. A lot of short-term, medium-term traders live by Stock Forecast Toolbox. They kind of abandon all of their other tools, and that's all they use, which is nice and wonderful, right? Active trader, we talked about ideas using stock or options. Weekly trader, monthly trader, same idea. You have every week, you have 3 bullish, 3 bearish trade ideas. All right, any questions? Does it make sense? BJ, Carl, Don, Joseph, Martin, Patrick, Robert, Tim, Michael, Mark, Federer, Wolford. Why? Any questions? Okay. What else can I? So we do have a newsletter. So there's a lot of education, right? I believe in education. My mother is a teacher. My sister is a teacher. I used to teach computer classes. I've been teaching trading for the past 10 years. So we do have a lot of education. I encourage you to look at the events recording, right? Either trading room or workshop. Let's say you are new and you want to learn about volatility skew, or you want to learn about options, right? You can search, and we can give you different webinars on options. I encourage you to review. What else? We have video snippets with, commonly asked questions, trading examples, and we just have in general learning center where you can look at our guides, workshop recordings, a newsletter every week on Tuesday. We send out a blog, right? We send out a blog. I think a month, Mondays we send out the blog, and the videos we send out, I think, on Tuesday. So I encourage you to add info@tradespoon.com so you can get these emails, you get the videos, and just it's free information that shows you what my opinion about the market, short-term, long-term, along with certain trade ideas. So I encourage you to also take advantage of this free information. We do have a YouTube channel, right? You can join us on YouTube. If you're watching YouTube, thank you, live. I appreciate it. Please don't forget to click on subscribe button. So search for the word TradeSpoon on YouTube, click on subscribe. And every Wednesday, Friday, we have videos, right? On Wednesday, you can participate live in live trading room. So I encourage you to do that. All right, any other questions? All right, FedEx continues to go higher. Midel did a good job. What else? It also identified Nucor. I think Nucor is also up. Nucor is up 2%, so good. Target actually recovered from, so pretty, Midel did a good job on predicting. Costco is up 3% on earnings. Leonardo is down 1.5% on earnings. What else is interesting? Mega cap today rally. Boeing continues to rally. Amazon continues to rally. And what else? Small caps turning positive. Spiders off the session lows, and QQQ and semiconductors continue to grind higher, retesting all-time highs. Today is the triple witching expiration, so do expect volatility, right? We have options expire quarterly, weekly, daily. So options, futures. So there could be a lot of volatility in the market as well, just due to this rebalancing, end of the year rebalancing. What else? I am watching Germany, right? They had PMI worse than expected. I mean, one day doesn't set the trend, but I think it was volatile, right? It kind of reached the August, July highs, or actually year-to-date high, right? I think it's year-to-date high. Yeah, so it's retesting year-to-date high. It is pulling back today. Fear of possible recession, right? Probability of recession has increased in the past few weeks in Germany. I mean, that has been same conversation we had in last year in December, right? It was kind of the same setup, same conversation, and actually, I mean, it did go up, right? December 15th, right? So when we had the same webinar, I said the same thing. I mean, it did rally probably beyond what I expected. Now it's a similar setup, right? But it also pulled back significantly. So I would watch Germany as well, right? Europe, and this fear of recession and their PMI data. All right. Any other questions? Crude oil, I mean, personally, I'm bearish on crude oil, right? I know it's oversold and a lot of people want to buy it. It is sitting like at all-time low. I mean, so for short term, you can trade anything, right? Because it's volatile. So, and you have good anchor point, right? In trading psychology, I always talk about anchor point, right? Prospect theory. So for prospect theory, right, that, we have a skew, our fear of loss is a lot greater than our, intent to make money, right? So in order to deal with the skew that, you know, our fear of losses is a lot stronger than our pursuit of gain, the only way to equalize it is to find that anchor point, find that reference point. And that anchor point and reference point is important, and it's different for everybody, right? So for crude oil, you know, I look at, you know, if I buy crude oil, I would say, you know what, if it drops below 67, I'm out, right? So I'm risking $4, right? Let's say I buy 100 shares, I'm risking $4. I mean, these are futures, but let's say it's a stock. So I'm risking $4, right? Then the question is, how many shares do I buy? You know, I propose not to risk more than 2.5%, right? So on the $10,000 account, it's $250. So if it's a $4 stop loss, you know, I buy 60 shares, right? I buy 60 shares. But for some people, $250 is, you know, this is how much they spend on coffee. For some people, $250 is, you know, you have to work day, right? So, or, you know, or a week. So it's different, right? So this relationship with money, this anchor point, is extremely important. This is the difference between making money consistently and not. So you have to find that reference point for yourself, and you always have to have the trades where you always risk the same amount, right? You never lose more than $250 on $10,000 account. Once you achieve that, you will see that you will become a superstar and your portfolio will grow. But if one day you're risking $250 and the next day you're risking $1,000, your results will be inconsistent, right? Sometimes you're a superstar and sometimes you're not. So I encourage you to always risk the same amount and always kind of keep reminding yourself about prospect theory, right? Prospect theory, reference points. So if this sounds, if you're not familiar with this concept, you know, intuitively or through, because you read it, you know, you're gonna have a hard time making money consistently. So I encourage you to do some research on prospect theory and spend some time and try to understand what exactly, and this is, you know, from Daniel Kahneman and Amos Tversky since 1979. So it's been around and it's well accepted in the world of economics, right? They get Nobel Prize for this, and, you know, any trader, any financial degree, you learn about prospect theory. All right, any questions? Newmont and EEM. Well, so in EEM, China, I'm bearish on China, right? I mean, it is, I mean, EEM looks better than FXI, right? So, but FXI is a big component of EEM. If you can find something that's, you know, doesn't have a large component, China, like you know, I think China for me is uninvestable, right? Because of the politics, because of geopolitical risk, and, you know, everybody's making these calls, or it's going to be year of China. You know, I don't follow it. Like, I got burned a couple times. I'm not going to. You know, it's just very, you know, you have to follow geopolitical, and you have to be good about geopolitics, and that's not what I'm good at. So EM looks a little bit better, right? Because the dollar dropped, right? Again, I'm bearish on the market. You know, I think dollar is extremely oversold and it will bounce at least the first 6 months. So I would stay away from emerging market, right? You know, this is kind of you know, way overdone, right? It's below 50-day moving average, below 200-day moving average. I mean, can it get to 100? Yes, right? But, you know, you have $2 to the downside, and potentially can rebound back to maybe not 107, but at least to 50-day moving average 105. So you have $3 to $4 on the upside, $2 on the downside. You can trade anything you want, right? If you see, you know, right now I would not buy EM. If you see that dollar drop, I mean, we have day one, it's not enough. But let's say day two, day three, like next week, we are not below 101.80. That's your anchor point. So the only way I would buy EM if dollar would drop below 101.8. The reason EM rallied is because dollar sold off. And just remember, it's the same trade, right? The reason silver rallied because dollar sold off, right? and so on and so forth, right? So just, that would be my idea. Newmont is I assume it's Newmont Mining, right? Newmont, NEM, right? Is that what we talk about? Well, I'm assuming it's NEM, right? This is similar to, I'm bullish on silver, I'm bullish on gold, I'm bullish on gold miners. Newmont itself, there's a big overhead resistance. So same thing, I would wait for it to get cleared. It's a nice move, higher highs, higher lows. Once it jumps above 42, that's your green light. Then you buy, right? GDX, personally, I trade GDX. I mean, similar setup, right? I would wait at this point. I would either wait for a pullback, and we had, some kind of a pullback, dollar, right, 3-4%, but maybe a little bit more meaningful back. So I would be a buyer for a pullback on the pullbacks, or wait for a breakout above 32, which I think will happen sometime in the next few months. BJ, yes, yeah. So, I'm bullish on gold, I'm bullish on gold miners, I'm bullish on silver. It's a little bit overdone, right? So you do have these pullbacks, but eventually it will break out. And I think this breakout will probably correspond with the concept of inflation. Well, not inflation, sorry, recession, right? If data is going to continue to deteriorate, that's when people are going to go into gold miners and silver. Until then, especially if I'm wrong and we don't have recession and it's a soft landing, people are not going to buy silver and gold, right? They're going to buy Microsoft, Nvidia and Boeing, right? There's a lot of money on the sidelines, trillions of dollars. And money market used to pay you 5%. Well, now it pays you, 4%, and it's going to continue to deteriorate, right? So as money market continues to deteriorate in terms of the yield, people are going to start scratching their heads and say, okay, I have to put it somewhere, right? So if there is a fear of recession, they'll put it in gold and silver. If there's no fear of recession, they'll put it in, cyclicals and technology. Okie dokie. Any other questions? All right, guys, you've been great. Thank you very much. I encourage you to try the Elite Circle. We do have 30-day money back guarantee, and I will see you either at the closing bell or Monday morning. Thank you.